Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today we are going to take a look at one out of the technology sector, HP. This is Hewlett Packard. HPQ is the ticker. It is August 30th, quickly exiting August, heading into September. This year has really flown by. Let's take a look at HP, see what you think about it. About HP Inc. creates, well, let's start here. If you want to know more about the company, check them out, www.hp.com. That is their homepage where I pulled this information from. Again, that's www.hp.com. About HP Inc. creates technology that makes life better for everyone, everywhere, every person, every organization, and every community around the globe. Through our portfolio of printers, PCs, mobile devices, solutions, and services, we engineer experiences that amaze. Who we are, the original Silicon Valley startup, founded in 1939, reinvented in 2015. I believe in 2015 there was actually a split between their printer business and their desktop monitors, PCs business, but I would have to go back and look at that. It's been a while since I looked at that. I know there was a spinoff. I'm just not sure exactly what the spinoff was, what they broke out of the company. We are one of the leading printing and personal systems technology companies in the world, and we're here to create technology that makes life better for everyone everywhere. In an ever-changing, connected world, HP Inc. keeps reinventing itself, its technologies, and what tomorrow holds, so industries, communities, and individuals can keep reinventing how they operate, ideate, and create what matters the most to them. Our mission is to engineer experiences and amaze each and every one of our customers. Our goal is to deliver predictable cash flow and return of capital to shareholders while reinvesting in the business. Operating in 185 countries, 28,000 patents, so they're not going anywhere. Even if they were to go out of business tomorrow, they would have some claim to these patents here. HP brand strength. Every company that I've worked for, or the vast majority of them, whenever they hand me a laptop, it is typically a HP laptop. And sustainability, whatever that means there. A lot of companies, I think that's one of the new buzzwords, sustainability, right? Kind of like AI right now is the buzzwords, even though AI has been around for well over a decade now. It seems to be the big buzzword now. And as you can see here from their webpage, laptops, desktops, gaming, business PCs, printers, monitors, accessories, bundles. This is the type of products that they provide. So not only laptops, desktops, but also accessories and some IT exposure there as well. Now, the reason we are taking a look at them down 6.63% on the day, huge drop here. Actually, at one point in the day, I looked at them and they were down over 10% here. So they looks like they may have recovered a little bit, but overall, big drop on the day. We are talking about HP Inc., ticker HPQ. This is out of the information technology sector. Closed out the day at $29.29. 52-week range as low as $24.08, as high as $33.90. Definitely, well, actually, they are a little bit closer to their 52-week high than they are their 52-week low, though they are trending back towards that 52-week low. And this is one of those times where patience pays off. This is one, full disclosure, in my portfolio. I have not been adding to this for a very long time because it did run up. But the market, stocks go up, stocks go down, and it's best to buy them whenever they are showing value. We'll see if this one is showing value or not here. Average volume, 6.9 billion. Today's was 21, so a big sell-off today. Right? Anytime you see a 6% drop in a higher than normal value, that is what it's telling you. A lot of people wanted to jump out of this one today, and I believe their earnings report was today, so that probably was the reason why. So you'd want to look at that news and see what they came up with for their most recent earnings report, as well as the future projections. And a lot of times it's not necessarily the earnings, it's the future projections that really gets them. Market cap of 28.879 billion. Today, the beta 1.02, so right in line with the overall market, just slightly more volatile. Price to earnings ratio, PE ratio on this one, $10.97 per share. EPS, earnings per share, is $2.67 per share. Their next earnings date, November 20th through the 24th. Again, I believe their earnings date was today for their most recent. So I would take a look at that and see what news is out there that may have had them drop this big 6% on the day. For dividend, $1.05. They are quarterly payer. We'll see that here in a little bit. Decent dividend yield, actually nice dividend yield on this one, 3.35%. Ex-dividend date, September 12th. So if you were to buy them now, you would be in line for their next dividend, and a 1-year target estimate, at least according to the Yahoo Finance, of $30.70. So they don't see a lot of upside as far as price appreciation on this one. Now, I like to go in and look at statistics, look at dividend yield theory. To do that, we look at the under statistics, go down to dividends and splits, look at their 5-year dividend average, 3.05%, compare it to their current 3.35%, or over here forward, it's the same number, 3.35%. And if it is higher, which it is, that speaks to some potential undervaluation. If this number was lower, that would speak to some overvaluation. They are inversely correlated. So on this one, at least according to dividend yield theory, they are potentially undervalued. Now, they do have a low payout ratio here, 38.39%, so they have a lot of room to continue to increase that dividend yield and dividend payout over time. So even with a nice 3.35%, they have a lot of room to increase that. And if you were to wait and put this one on your watch list and see if it pulls back, and if their earnings projection is lower, I would expect they would continue to pull back towards this 52-week low. You could even lock in a higher dividend yield on this one. And again, full disclosure, I am long HP. You'll see my position here in a little bit. Now we want to look under financials. A lot of good information here. You're going to find the balance sheet, income statement, their revenue over assets over liabilities. Do they have growing revenue over time? Is their debt under control? How all that looks out, you want to check out. We want to look at free cash flow because we want growing dividends, and dividends are paid out of free cash flow. So we look down here under free cash flow, 2019, $3.8 billion. 2020, $3.7 billion, a little bit of a drop there. Big jump up here from 2020 to 2021, $5.8 billion. And from 2021 to 2022, which I would expect some of this is probably COVID related, right? A lot of companies and a lot of people were home, may have been buying a home computer or building out a home office, that sort of thing during the COVID response. The work from home efforts probably drove a lot of these sales here. And little drop here from 2021 to 2022 back to 3.6 billion. Overall, if you look at 2019 and compare it to 2022, it looks like a drop, but I want you to look at repurchase of the capital stock here again. Look at this line item. 2019, they were buying back 2.4 billion of their shares. 2020, 3 billion. Big purchase here in 2021, 6.2 billion. Another big purchase here in 2022, 4.2 billion. So even though it looks like their free cash flow was decreasing, if you include the repurchase of the capital stocks, it's actually increasing over time. They are just using that free cash flow to buy back a significant amount of their own shares, which I really, really like. That was actually part of the reason that I jumped into this one. This is a slow grower. I will say that. You will see that here in the future in the next couple of slides. But the repurchase of the capital stock and the dividend yield and the low payout ratio were three of the reasons, part of the reasons that I jumped into this one whenever I did here almost 2 years ago now. Let's keep going, and I always recommend more than one source. So another one that I like is stockanalysis.com. They have 12 stock analysts that have taken a look at this. They call it a consensus hold. I would agree on this one. I have been holding for quite a while, have not added to this one. I would like it under my cost basis. We will see that here in a minute. Now they have a low estimate of $23. That would be close to its 52-week low again, and that would be a 21.46% decrease from where it currently sits. And I'd love it to drop back here into the low 20s, and I would probably add a significant tranche to my position. Average estimate of $29.58. That's pretty close to where it sits now. So that would be a 1.01% increase from where it currently sits. And if it happened to hit their high of $39, that would be a 33.17% increase from where it currently sits. All the while, you could collect that 3+% dividend yield. And if you, like I said, threw it on your watch list and waited for it to pull back more, you could even increase that dividend yield. Now, under statistics and financials, you're going to find a lot of the same information. Here's the forecast that we're looking at here. I like to look under statistics and look at return on equity, ROE, and return on invested capital. I like 10% or better for both. We're going to see over here return on equity is negative 93.3%. That is not good, and that is not a good number. I would have to look into the books and see what they do. They have some write-offs that they're charging. Maybe this is part of paying down some debt or what is going on here, but that is not good to see. But on the flip side, if you look at return on invested capital, it is very high, 30.40. So this leads me to believe, typically if one of these numbers is negative, they both are. So this leads me to believe they may be paying down some debt. Maybe this has something to do with the big tranches of shares that they bought. Something here is funny about why this is showing such a big return on invested capital, but a big negative on return on invested equity. So this is a mixed bag here. One meets the criteria, one does not. Another one that I've recently added, I like to look at EPS growth. I like 5% or better. You can see that they project out 6.31%. And I don't really look at revenue growth forecasts, though it is something to note because companies typically follow earnings. That's why I look at EPS, but you also want revenue to be growing over time. Now, this says they expect revenue to be negative 1.52% over the next 5 years. And I did assume there would be some downturn in revenue growth with a big jump up in 2021 from, again, the COVID-19 related issues. We had a lot of people bought computers, and it's not typically something you buy every year. So whenever there is a big jump up, these cyclical companies typically have a couple years after the fact where they have a downturn, because again, you're not going to buy a computer 1 year and then, unless you break it or something, you're typically going to have a computer for 3, maybe 5 years. So that may account for some of that. And even if this company is flat with it buying back the shares that it is, growing EPS, all the other numbers except for this return on equity that I don't really like, there's nothing really that jumps out to me other than the valuation. I would like it a little bit lower than it is. Let's keep going here. As I said, I am long HPQ. I have 162.489 shares. I'd love to add some more here, but I want it under my cost basis of $28.89. So really anything under $28 per share, I would be interested in adding some more. You can see even with the big drop today, I still am up 0.76%. So up slightly here, $64.52. Not a huge one, but again, I would love it to drop back into the low 20s to be able to increase my position here on this one. So it's on my watch list. It's in my portfolio, but I am not adding and have not been adding for some time. So I like to see that it's pulled back. I would like it to pull back some more before I'm interested. Payout ratio, like we said, in the 30% here. 39.18 is what they're saying here. I think the other one we saw was 34, so let's just call it mid-30s there. Dividend growth of 5%. Nice dividend growth overall. Went back to 2020. You can see 17 cents here. In December of 2020, they raised it up to 19 cents and some fractions of a penny over here. I won't count those. Then in December 2021, they jumped it up to 25 cents. Looks like they jumped it up again December of 2022 to 26 cents in the fractions of a penny. I would expect if they continue this dividend growth here to see another increase this December. This is the vested interest stock screener. Go ahead and pause this and go through this at your leisure. And that is it. That is HPQ, Hewlett Packard. Let me know what you think down in the comment section. Is it one in your portfolio? This is one in Buffett's portfolio. I know he was buying this one a couple years back. Also, when I was looking at this and I looked at one of his 13Fs, I was interested in it. And when I saw he had picked it up, I thought, well, if he's going to grab some, I will grab some as well. It was one I was interested in. Anyway, I like to look at stuff that I use. Like I said, the computer I have right now is a Hewlett Packard. The one that my business gave me is a Hewlett Packard. Almost every computer, I believe, any company I've ever worked for has ever given me has been a Hewlett Packard. So it leads me to believe that a lot of companies are using this product, and I use it as well. Well, that is it for this one. Appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors. So hit that thumbs up button if you find any value in the content or you're a dividend growth investor yourself, and hit that subscribe button as well so you're notified whenever we put out any new content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Let me know what you think of HPQ down in the comment section below, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and cancer money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel by a certified financial advisor.